It is Monday, the 13th of October. Going to be doing a review for today, and as you can see, not the best session on this particular account, and I'll go over what happened there. I did catch some really sick trades today, though, and trades that I'm really proud of, but obviously that's not the result I want in the end. And yeah, so I'll go over the trades in a bit. I just want to get right out of the way straight away, show the executions. There's a whole cluster of executions in this area here, and that's kind of where the damage happened. But I'll show the executions and then I'll jump over to a clean chart and walk through the trades that were really good trades, because there were some extremely nice quality setups that I took and could have stopped early on. So you can see, got one trade here that was a loser that could have been break even. We then had this long from up to here. That was a very nice trade, exactly what I was looking for. And like I have labels for every part of this trade. The entry, the framework, it was exactly what I should have been doing. I traded it well. Took another attempt over here, essentially getting long and then chickening out. And it looks like I might have even flipped short, but you can see quite quickly that I started taking multiple attempts. I did have something I was looking for. I had a specific model I was looking for, where if you look at this short-term high on the 15-second chart, won't do it now, but the short-term high, I was looking for us to get above it, close back below, close back above, and I was going to catch a long with a really tight stop. Got stopped out multiple times attempting to do that. And then, as you can see, that's resulted in all this sideways price action. So had this been extremely strong price action and very bullish, this would have held. The fact that it didn't hold, but it still continued and made a new high, was a prelude to this sideways type price action later on. And yeah, I just got caught up in that, caught up being chopped up. I had multiple entries that I was planning to take, including the long above this old impulse high, and also this high over here. Sorry, this one. I was looking to get long above that as well. And you can see that I tried both of those trades, neither of which worked. And then, yeah, just took too many attempts. I then took one more attempt over here. This was, as you can see, this wasn't a trade I should have taken. This was more me just guessing, and trying stuff out is not how you make consistent trades in the market. So shouldn't have taken this short, got stopped out, and that's what hit the max loss. And that isn't even the max loss. The max loss is actually meant to be, which I'll change it right now, that should say 600. So you can see that I went in here and manually changed it as well. I only set this literally on Sunday to say that, because I had a really bad day on Thursday last week. Like, I went fully on tilt. I did a very thorough analysis of that day and I came to the conclusion that I need to wait for it to reset first. But yeah, I came to the conclusion after doing an analysis of my trades that 600 would have been the ideal, like the optimal place to have a max daily loss, because I don't want it too close. But $600, very recoverable, very easily. And it was kind of around the $520 mark that things started going really south on Thursday. Obviously, a $600 loss today would have been a lot better than $927. And yeah, need to work on that. This is the first trade I'll go over, and I'll just show the execution first, and then I'll jump over to TradingView. This is on the 5K challenge account, but essentially this is the Asia Open, and we have a displacement towards these all-time highs. We had some old relative equal highs back here on the 15-minute chart. There's a concept that I use that I call the liquidity mid. And when you have two key liquidity pools, a lot of the time price will bounce from the midpoint. However, not all the time. And when it doesn't work, then it fails spectacularly. And this particular time, I actually managed to anticipate it to fail. And the reason why is because it had another framework that I look for, which I'll also show, a Delirium model, and so that trumps the other one. Anyway, I made a good decision to take the trade in the direction that I took, even though I had conflicting analysis. I was able to have a hierarchy of that analysis and take the right direction. So yeah, getting long after hitting the liquidity mid as we pulled back down. I possibly got in a bit early, but I wanted to put on a small amount of size, so just a small amount, and then you can see I added over the side. But the small amount of size with a stop below this swing low. The reason why is because this was an impulse low, and I wanted to give it the chance to take this out and reject from it, which we actually did end up doing over here. So a wider stop loss, but risk that I was willing to take. As you can see, it's worth putting some skin in the game. I wrote out. We then take out these relative equal lows, have a nice strong rejection back in. I recognize that as being exactly what I was looking for. We'd taken out the lows, rejected, and I didn't see that we should take out this low again. Got long, we had this nice impulse high to target. As you ran into it, took a partial in case it rejected. It didn't reject, so as soon as it dropped back down, I added back into the position and then took partials as we ran up into all-time highs. So it worked really nicely. Possibly could have, I think in Asia it tends to make really directional moves as well, so possibly could have not, like I could have anticipated it to continue moving in a singular direction rather than wanting to take partials in case it had a pullback, because we tend to have really nice big ranges in Asia, so that's an improvement there. I was only holding like the smallest runner, 0.01, as it hit all-time highs, and I wanted to just trail that stop, and in case it would continue pushing, which it didn't, so I got stopped out. But overall, it's a good trade, and I'll walk through that now. Then I'll jump over to the trades from Top Step. To start with, I'm actually going to get out 4, and then I can show where we're at. So do a quick top down. That is today, Monday, so very green day. We had that previous week high with these relative equal highs that we were running above, so it makes sense that we rallied really nicely. And here's that Sunday open. So Sunday opened up with this 4-hour candle, gap down, and then just went straight up to these relative equal highs on the daily chart. So those are our all-time highs. I'll mark those out. ATH. So dropping to the 1 hour, you can see that Sunday open. You can see that we had clearly been ranging down here below this really obvious buy side pull up here. So all that buy side liquidity above these highs. Anyone who was trying to short throughout all of Thursday and Friday had this stop there. But this is where the Delirium framework comes into play. So Delirium framework is when you have relatively equal highs with an impulse high above it, or inversely, relatively equal lows with an impulse low below it. And here you can see that we clearly have that framework. We have these relatively equal highs, which I'll do this, M15 RAH. So smooth highs in the 15-minute charts, and above that we have a big gap and an impulse high, a really obvious impulsive high above it. This framework basically indicates that when we have this situation, we are likely to not, when we hit these highs, we're extremely likely to go to that further high. And the way that I conceptualize this and understand it narrative-wise is, let's say there's a classic support and resistance trader. So it's just someone who trades support and resistance. They think that, okay, cool, when price comes and touches this strong resistance, you short at the resistance and you put your stop loss above resistance. And maybe that's how someone trades. However, it'd be dumb to put your stop loss just there because, price is probably going, price isn't perfect. It's probably going to go like that. And then you're stopped out. So what do the really, really smart support and resistance traders do? Well, I'd assume they go, well, that's a really safe looking high. I can go short at resistance, put my stop loss at this swing high that's above it, which is really safe, and then catch my trade. So when price hits it, it's there are trap shorts. There are trap traders with liquidity at this further high, and so rather than just going here and moving low, it will hit this high and then continue pushing in one movement up to this high. That is the delirium framework. You can see that that's exactly what played out, and the liquidity mid concept is when you have a buy side pool, or any liquidity pool, and then you have another liquidity pool. You find the midpoint of that, and that midpoint can act as resistance and send price the other way. So we've got multiple highs here, the all-time high and that. But either one, you can see that we do hit the midpoint. We get this little reaction, and occasionally, like if it's in alignment with the high time frame order flow, that'd be a great place to short if we're in a bear market. But we're not in a bear market. We're in a bull market. Just wondering if I could see a similar situation. But yeah, look into it anyway. Like you can kind of see it here. You got this impulse low, and then this impulse low there, and it gets near the midpoint. But because we had the delirium framework, I saw that we had the liquidity mids, and I anticipated this to actually fail. And so we need to see here. Go to the 5-minute charts. Now you can see all these lines pop up on the charts. These are just the hourly open prices, which I use to determine premium and discount throughout the day. But if we look at the narrative, you can see trap shorts above these highs, ranging, selling off, taking out all this sell side, respecting this order block. Then on the Sunday open, we gap down, rally up, take out buy side, come a bit lower, and then have this rally, a really nice displacement up towards the all-time highs. And we easily get through these highs. We displace to and through them and hit that liquidity mid. So I was anticipating this to fail and to continue rallying, and the delirium framework to play out to these highs. In fact, we only just touched the all-time highs, and this is where I took that trade. On the 5-minute chart, I'm just going to drop down in time frames and probably not jump between them too much. On the 5-minute chart, you can see that we did take out the swing low. We had this rally up, created a really long wick. So that's the first confluence for the trade, is a long wick on the highs indicates that we're enticing shorts with a quotation mark bearish rejection. So retail traders see this long wick, classic chart patterns say that that's bearish. We then have this down closing candle. Everyone's thinking, cool, we just had a big rally, we're extended, it's going to come back down. So that was confluence. I knew that there'd be a lot of people trying to short this high. And you can see on the, might actually duplicate this tab real quick. What one was it? Clear. There we go. And do 2. So on the 1-minute charts, and the 5 minutes I'll have up here. So creating that long wick, and then we have this situation. So I was watching price in here. I really liked the fact we had this impulse high and this leg down, and then a failure to continue pushing low after that. So anyone chasing the short, this becomes a really obvious place for trailed stops. Go sideways a bit. I did get long initially, as I mentioned, with a stop loss down here, allowing for it to come below this impulse low. But the real entry occurred after we had taken out the sell side, and you can see that we had a really long wick. So similar to this idea, traders who are chasing the long, they see, oh cool, bullish rejection, I can put my stop loss at that low. We then take that out, very shallow, but we did take it out just by a few points, like that. And after taking it out, we get a nice reaction back up, and that's 6:45, 6:46, 6:47, at 9, and then a new 5-minute candle opens. On the 15-second chart, this looks quite clean as well, and I trusted getting along here with a stop loss at the low, and yeah, go sideways and gets this nice push up as we approach the 1900 hour, and 1900 opens up and just gets that really nice push up to the all-time highs. So that was the first trade, and I'll show the 15-second charts just to complete it, and then I'll jump over to the rest of the session, and I'll go over I'll just go over them in order. So there's us taking out that swing low, getting a really nice reaction, pushing up towards these highs. So you can see that swing high. We fall short of it, but then we can get this displacement through it. That speed and distance through it is what gave me the confidence to buy all the way up here. I would have liked to have, if it has done something like this, I could have bought right there and would have liked that. However, that didn't happen, and the fact it didn't happen and just pushed in one very fast, swift movement gave me confidence that, okay, it shouldn't come back down here. We should be good to go. The reason why you see me taking a partial, a little bit below that high, that's based on this impulse high right there, which I expected us to get a small reaction from and potential rejection, but you can see it's pushed straight back up through it. And that's, which reminds me, there's one other thing I forgot to mention. So way over on this side of the curve, I zoomed in to look for where I could add. I found this impulse high, this 1-minute impulse high. This is a concept I use a lot of, where we have a swing high and a price leg, a short-term high. You draw that out, that had an impulsive move afterwards. And this can be used, I kind of think of this as, this is kind of like a fair value gap. So if you imagine this being a fair value gap, and that's the fair value gap low. And the idea is that once we hit this high, you'd expect it to reject price because it's at a deep premium, it's an impulse high, and then it does reject price. So that's great. But if it's bullish, then that price rejection is going to fail. And the idea is that you wait for that price rejection to fail. So right there, by closing back above, and then that becomes the entry long. So that was why you see me adding to the position right there. So that's what I was waiting for. So all these entries before that were kind of me anticipating this to happen, but getting a lot better price down here than all the way up here. Because if I bought up here, technically the stop would be below the swing low. So putting on a small amount of size down in this area with a very wide stop, and then adding into the position here once we got that nice reaction was just me anticipating this move up. And then once we got the closure, that was the actual entry signal. I could have added more size there for sure. But yeah, it played out nicely. So the next one I'll go over real quick is this long. Obviously we had only just tapped the all-time highs, and I kind of wanted a long. I knew not to buy right here after printing this long wick, because we know there's going to be a whole bunch of sell side down here of anyone who's been chasing this run up. All their stops down here. So as we're up in this range, I left it. It sells off and takes out the sell side. I wanted to buy down here. I saw these lows. I figured it's cool if there's a good place to buy. If it's taking out this low, it's likely to hit this area as well. So I had a limit entry down here, which got hit, but because I was using the futures, it didn't actually fill me there. And I missed that initial entry, which, wasn't ideal. And I'll actually show I'll do the trade analysis here. So I had my entry sitting down here, which hit on the other chart. It didn't quite hit here. which is frustrating. And then you can see I ended up buying at 58.6, which is all the way at the top of this candle basically. So I ended up buying up there, which is the first thing that was not ideal. Is my entry price was very not ideal. And then all of a sudden, like, oh, so now I've got a really wide stop loss when actually I wanted to enter all the way down there. So the first issue was kind of chasing price, but I saw we're taking out significant sell size, we're getting a reaction. I didn't think this was the high, and we've been leaving these smooth highs on the way down as well. And I figured that would be a great place to get involved. When I missed the entry, I bought up here instead. Now the issue with buying up here is that we then get this long wick, and you can see that this wick drops down really aggressively, takes out the previous candle low. And when that happened, I obviously wasn't very confident in my position, possibly because of the fact that my entry was not that good. And so I just mitigated the trade and closed it out immediately after that. So I closed the trade out down here, pretty much at the wick low. Immediately after that, it rallied straight back up. So I remember feeling quite frustrated at this point when I'd just been mitigated the trade and then it ripped straight back up. And you can see that I bought at 61.1, so all the way down here. So now I've taken one trade, and now that's the second trade roughly there, with a stop below that low. And where are we? I took one partial off just up here at these highs. We didn't actually quite hit these highs, but I took one partial off. And then because we hadn't hit the highs, I was like, cool, I'll just add it back on. Because we hit the highs on the futures chart, but on this chart we didn't actually hit it just yet. You can see it's this area right here. So long, didn't hit the highs, dropped down with this long wick. I bought again, and then it just rolls over aggressively and takes me out. So that was a $300 loss, I believe. And the problem with this, part of what made it frustrating is that it could have been a break-even trade. So let's say I had bought down here where I wanted to, where I was prepared to buy down there. Well, actually, that's not quite true, and I'll explain why. But if I'd bought down here and we had got this nice reaction, I could have easily got to break even. And when it failed, I would have been completely fine with it. Would have been a break even / a small win. So the fact that I lost $300 on it instead was a bit frustrating. And there is a reason for it, and it's all my fault. And the reason is that after having taken this trade, I was like, cool, I'm going to go and get lunch. I went off to the kitchen. I took my laptop with me and was just watching it in the background. I kind of knew what I was looking for, so I was like, sweet, I'll just cook and watch the charts. Came into my entry zone, so I put an order in, looked away for the charts for a bit, and that's why when price has been on this chart, I did actually hit it and got this nice reaction. When I looked back at the charts, it's like, oh, it's already moving away and I'm not in it, and it hits my point of interest. So I bought up here. And then not being super dialed into the charts as well, when we had this aggressive drop back down, which is right here, you can see. When we had this drop back down, that took me I had mitigated, even though I was just taking out the short-term low, and then it rallies up. So that could have easily been break even. So we'll leave that for now. The lesson from that is that, I shouldn't be trying to multitask like that. If I'm going to be if I'm going to be taking trades, like if this was a live account and I was putting $300 of risk on the line, I wouldn't want to be just casually frying an egg with one hand and watching the charts with the other, So, I'll have to fix that up. This trade, however, super nice. You can see I was quite confident in it. It had a 78% probability of playing out. That's just what I say instead of conviction level. I say the probability, because then if it doesn't work out, then it just becomes a probability. But you can see buying here above this wick and anticipating this delirium framework, the exact same as we saw before, relatively equal highs with an impulse high above, playing out. I'll jump over to the other chart now and explain it. I've actually got it drawn out here as well, but I'll draw all this up again on this chart. So I'll bring up the 5-minute chart on this side. There we go. So after selling off, we took out this really major liquidity pool. I say major because since the rally from the Sunday Open, this was the first liquidity pool we'd kind of engineered, and then we enticed higher from that. We then engineered this sell side just above it, so anyone who had a stop down here or moved it would have moved it to this low. So we know there's significant sell side down here. We also have this impulse low just below. You can see that we hit that really nicely, and that's a nice confluence as well. And then with the hourly candle open, you can see that we have 1900 enticing higher from this liquidity pool, and then 2000 selling off to a discount below the 2000 open and spending a significant amount of time below that open. In fact, 26 minutes below the opening, making multiple lows. These we'd been selling off this entire time as well, so enticing shorts. We had these nice bearish legs lower. Once again, another nice consecutive down closing candles that are just digging into sell side and enticing shorts. Spending a whole bunch of time down here as well before getting this really nice reaction up. And if we look at the 5-minute chart, you can see that we engineered a nice low. We came down, hit that low, and then got this beautiful displacement higher. Another confluence is that this is that same old relative equal high level from the 15-minute chart. So from back over here, old relatively equal and highs and lows. Key point of interest because there's a lot of liquidity there, a lot of interest to buy and sell. And so price will return to these areas and it becomes a great place to accumulate. That's where your support and resistance ideas do work. So the fact we were there, that was a confluence as well. And the narrative of there being trapped shorts. So anyone who'd in the last 1 hour who had been trying to short had their stops up through this range. We then have this displacement after spending time below the sell side and leave this long wick. So this is where it gets really interesting. We have a really long 1-minute wick. Same as I mentioned over here, we had that long wick narrative with the 5-minute chart. Traders see that as a bearish rejection and they want to get short. So that's the first confluence. You pair that with the narrative of the trap shorts, then all of a sudden you have multiple narratives that are aligning on multiple time frames. Also, if we jump over, oops, wrong one. If we jump over here, I'll go to the 1 hour charts, 1 hour time frame, zoom in. That is that same swing high from the 1900 candle, left a really, really long wick. So once again, big bearish rejection from all-time highs, equal highs. That's another confluence that everyone is probably looking at that, thinking it's bearish. Then on the 15 minutes as well, once again, a really obvious long wick high. So it just becomes a super obvious pool of liquidity up there, and I was very, very confident in it getting hit, which is why I got chopped up here. So jumping back over to this chart, we know that we've got a long wick up here, enticing shorts. We've been selling off, leaving smooth highs, including these relatively equal highs just here. So smooth highs the entire way through the range. We'd spent time at a discount below the open, below sell side, hitting the 15-minute relative equal high and impulse low, getting a really nice strong rejection after taking out this impulse low. Then leaving this long wick. So that gave me the narrative that after we get above this wick, we've now got trap shorts below the wick. So price should not come back down here. So technically, stop should be at basically the low end of this wick because I expect the midpoint to hold price. So that's where stop loss would go. I placed my stop just a little below it, about here, just to give it a bit of extra room just in case. But I mean, technically you could, from for my testing, I've pretty much always done that. I've put it at the extreme end of the candle that I expect to hold of the wick. That became the entry. I wasn't expecting that it should hit the midpoint of the wick. It had already hit it just there. And just the narrative said that we were extremely strong. And you can see that we get that push up towards the highs. Don't quit it yet. Have this pullback and then blast straight back up. That would have been a perfect entry right there to anticipate this delirium framework playing out. And as I mentioned before, delirium is a relative equal highs with an impulse high above it. And the idea is that it's not going to here, it's actually going to push all the way up to this high. So the trade became, you get long right there with stop and targeting this high. This is the place to add using the delirium framework, because we had just had this big down closing candle that's, big down closing candle that gets immediately overlapped straight back up, and then anticipating that push back up. And I'll grab the 15-second chart up again so we can see that in a bit more detail. So with a bit more detail to it, that's us hitting that midpoint of the wick, hit the highs, and then anticipating that we shouldn't get down here. So giving it room if it did want to test that midpoint of the wick again and take out the swing low. But it just came down like this, and I bought below these lows instead. Get a nice rally up. So that's the first long right there. Pull back and then blast straight back above it, offering a nice entry right there for this push up. And yeah, that worked out really nicely. Then it comes to the next trades I took and where it kind of went a bit south. And I'll mention why that was the case. What I liked about this was the fact that, one, we had left these relative equal highs, perfect equal highs. I was anticipating that we should hit the, make another leg high. And we'd sold off down into these lows. Then if you draw out this exact same wick, what do? Well, we respect it perfectly. I was like, cool, that's a really, really nice signature. Exactly what I want to see. I reckon this is the low and this will hold because we've got this nice displacement afterwards. And yeah, they just look really good to me. We then have this aggressive sell-off. We get really deep in the range. Gold tends to do that. So I was like, cool, this looks all good. And then we get this push back up. So this is the area I started buying because we were respecting these key PD arrays. We put in this intermediate term low. We then dropped below this sell side to a deep discount and got a nice reaction out. So I figured, cool, this is looking really good, and I wanted to buy in this area. I also identified in the 15-second chart, which I'll show real quick. We had this impulse high, and you can see this is the highest impulse high before this big gap up to the high. So if we were bearish, I'd expect us to hit this high and reject lower. Because we weren't bearish, I was anticipating that it would hit the high, come back below it, and then close back above, and that would be a long, which you can see happens, but on the 15-second time frame, that actually happened multiple times. We come above it here, we take out this short-term low, we close above. That's technically the entry, so I got long, you have a stop there, get stopped out. Okay, well, we've taken out the low again and we close back above. All right, maybe this is it. I got long again and get taken out. And that explains why you see in this area here so many executions, getting long, getting stops, getting long, getting stops, which was quite frustrating. But I'll jump over to 15-second chart and show in detail. So this is that same area. It's the midpoint of the wick that we hit. And yeah, so initially getting along very small size after we got this nice reaction. It's like, cool, this is actually looking really good for the low. And I'll add up above here. We then added in here for whatever reason. Maybe I was using that swing high. Took a couple of partials off. And I think the reason for that was actually because it didn't look healthy. Yeah, that's right. I started second guessing it here. It just wasn't looking particularly strong. And then I recognized, well, actually, technically, we did hit this buy size and we did reject lower from it quite aggressively. And it's not looking all that strong after all. So it made sense to take some size off here, which I did, which was good. And then I get, let's see. So this is likely where it goes wrong. Buy 2, buy 1, sell 2. So I'm now flat at this point. Sell 3. So I went short. Once we had shown weakness, I recognized, okay, actually it's hit this high. It's not really what I'm after. I decided to go the other way. And that was a mistake. It is technically a entry technique that I could use if we were bearish, but only the reason I bought it is because I thought it was bullish. Now all of a sudden I'm like, okay, well actually we took buy side, we've got to swing low. We're getting back below it, we're failing to reject. It's probably just going to dump. We took out this short-term high. I'm just going to sell here. So I sold. And I actually took it all off. So obviously I realized that, okay, I shouldn't have really done that, whatever. I'll just get out again. And then we rally back up. So now I was like, okay, cool. This was a bit of a, just messing around a bit. That wasn't ideal. But now we have this exact model that I was looking for, which is that impulse high. We get above it. We take out a short-term low right there. We close back above, buy 8, really tight stop. So that's great. It then comes straight back down and stops me out. So that wasn't ideal. We then come straight back up and we close back above this high on the currency chart. It's like, all right, well, I'll put 3 back on. No, I put 11 back on this time. So I figured, okay, well, this was the actual one. This should work now. Get stopped out again. And then it comes straight back up and just starts ripping. So as it's ripping right at 67, I bought up there. So okay, this is really showing that bullishness now. And then pretty bad entry. So I was peeling off the partials as we hit the highs, which is a little bit off on this chart, but hitting all this bastard up here. And yeah, and then I'm not going to go into too much detail. This is kind of useless, to be honest. But you can see this is the first thing that really stands out. The fact that I flipped short after attempting this long. So yeah, I recognize that, okay, it's not looking so strong anymore, but it doesn't mean that I should just go short. This was perfectly fine, but 3 tries, that's not perfectly fine. 1 attempt, sure. 2, okay, something's a little bit off. And then, yeah, and then that third one, sure, it works at that point, but it's already showing me the price action isn't too ideal. And that's one insight that I just have into it, is that the price action isn't going to be like these big ranges for the entire session. Eventually, it's going to go sideways for a bit. Which brings me to something I should have brought up earlier. So this week, for the first time in the entire time since I started trading, like almost 3 years ago, I've decided just to completely skip New York session and just do Asia and London. So I'm currently living in New Zealand, and I've been in New Zealand for the past year and a half, and my schedule has always been pure night shift. So I wake up in the evening, I work all night, I trade all night, and I go to bed first thing in the morning. And it's not the easiest lifestyle. It's impossible to socialize, like completely impossible. And it's difficult to get sunlight in the winter. It's summer now, but it was very difficult to get enough sunlight. And it just wasn't, it was quite difficult, especially if you have like a really bad day trading, and then all of a sudden it's like, okay, cool, now it's 4 a.m, you're by yourself, and there's nothing to do except for look at charts, or go for a run and cry. So that wasn't ideal if you have a bad day. I've decided this week that I'll give it a go just trading Asia, because I've been doing really good trading London recently. So if I in the New Zealand time zone, the Asia, like you can see, it's 1500 right here. This is EST. Currently in New Zealand, it is, it is 8:12 a.m. So I got up a few hours ago. I can start off the day well before the market opens 1800. Do heaps of prep work, analysis, have a really good morning routine, get some sunlight. I'm a big morning person, so now I can really take advantage of getting up early and then just joining in the morning, getting coffee, doing some work. I can even work on some other projects I've got that are not trading related. And then trade Asia, and then I can trade London in the evening, which is kind of around 7 p.m. till about 10, and then go to bed at 10 p.m. So sure, I'm still trading like the entire day, but it's I think it could be work really well. And I've been doing really good in London recently, so I figured that it couldn't really hurt to give it a go. But I haven't really traded Asia before. Like, I've placed the odds trade in Asia, but like most people who usually trade the New York session, it's kind of like a really one-off thing that you probably regret afterwards. So I'm not particularly familiar with it, but I am confident in my chart analysis and my frameworks that I can identify them. Like this Stellarium long worked really nicely. That was at 8 p.m. Gold moves really nice in the Asia session, so I figured gold, great thing to trade. But I'm not familiar with it, as I said. And so you can see we have these really nice runs. I'm like, cool, this is great. I'm having a great time. Cool, this could be a long right there. And then all of a sudden it's like, we're just going sideways. And if I'm trying to think that we're just going to have these big ranges non-stop for the entire session, then that's where I went wrong. You can see we consolidated a bunch, took out the sell side at the 2100 open, and then had a nice climb up from there. London session, pretty crap on this day, really range bound just in here, and then New York has this climb up a bit higher. But in general, I just need to get more familiar with how the Asia session moves and just be aware that it's not going to be really large open ranges the entire session. So anticipating that, yes, we're probably going to have some really massive wide open runs. I need to anticipate that because Asia can have the best moves on gold from any session for sure. But once we've had some really nice big moves and hit all-time highs and all that, then maybe I should be like, cool, that's probably good enough for now. Or switch on to a high time frame analysis and rather than thinking, okay, I'm going to buy right here with a stop loss 2 ticks below, rather than doing that, look at a high time frame and think, okay, what's happening? Well, we've enticed shorts with these relative equal highs. We've got a clear order block down here with this order block open, and that took out all the sell side at a key liquidity level. I expect that this order block should hold. We also have a long wick plus displacement. That means that this fair value gap is likely to stay open, which we just wick into it, then rejects. Cool, we've done that. So I should be able to buy in this area with a stop loss below the midpoint of this range from this open down to the low, to the midpoint about there. So stop loss down here should be perfectly fine, and then just let it sit and do its thing. Or I could just be happy that I caught a nice trade. That's done. Sure, I'm not quite at break even yet after that loss and then that win. But that's perfectly fine. I took a good trade and I'm finishing with a win. So that's all I need. And then I could have waited for the London session and then traded that. That is, what I should have been doing really. So this account is going to need some very delicate work. I didn't even look at that, but we have $165 of drawdown available to recover the account with, which I'll be working on for sure. So I might as well look at performance stats, and there's something that really stands out is the fact that there are 2 really big ridge days. That was full tilt mode, really not good on Thursday, but I did a very thorough analysis of that on the weekend, so I've definitely, and that's where I came up with the insight that of, where is it? That's where I came up with the insight that I should be cutting off after a certain point, because I was like, I went through every single trade and I looked at what the trade was, why I took it, what my mindset was at that point, and I came to the conclusion that it was exactly here where I took this loss that took me down to negative 540 on the day. That's where things started getting a bit out of hand, and you can see that had a really small recovery and then it just drops off a cliff really, really, really fast. And then, as you can see, trade frequency increased dramatically. It got very volatile, having $500 plus price swings up and down, and then closing the day out there. So I did actually, I will just show real quick the what I wrote up for it, just so you can see the kind of review I did. So yeah, NQ went on tilt, and you can see that I've done very thorough for every single trade up to the point where I started upping my frequency. But the things that really jumped out, one was I was looking for a long, and then I was able to flip short when I recognized the short because I was reading the price action. But when I took the short, I took a 1-to-1, even though it went a good 3 or 4R. And the reason why is because that short didn't meet my bullish expectations, and that's really jumped out at me. As I had an expectation, reality did not meet my expectation. So although I knew it was a short, and I was able to take the short quite comfortably before I went on tilt, because it didn't meet my bullish expectation, I defaulted to taking TP really fast at 1R, even though it went on to drop way further. So what if my trading plan is to listen to what price action is telling me? So it's actually part of my plan is to listen to what price action is telling me, which means that when my expectation of bullishness isn't met, my trading plan is to listen to what PA is telling me. So I expect that if price action is telling me it's bearish, that it is part of my plan to go short. So when price doesn't do what I was looking for and I see an opposing entry, I can take it and it be part of my trade plan, meaning that I have no conflict and I can easily hold the trade for a nice move. So that's the first thing that jumped out. You see I've written out a lot of other stuff and I've just highlighted 1 or 2 things. So the fact that negative 540, it really jumped out at me at not being a good number or acceptable, likely was the trigger. And yeah, a few other things, but essentially that was my trading day yesterday. I feel like it was a good session on yesterday on Monday. That was Thursday that I was just looking at here. But on Monday, really happy with that long, really happy with the long I took here as well. And there's clearly some stuff I need to work on with the way too many trades I took in this area. But yeah, I'm confident that I can find good trades in Asia, and that's the main thing. I'm also confident I can find good trades in London, and for me it's still just a matter of doing less of the trades that I shouldn't be doing and doing more of the trades I should be doing. That is essentially it. Really quick, I'm going to show one chart I'm interested in, PLTR. So I'm interested in actually buying this, but I'm a little bit worried that it's not going to come and give me my entry because the market's incredibly bullish and we sold off on Friday, meaning that everyone thinks that the market's going to crash, which means it's going to go straight back up. And if it loads, There we go. And you can see that we did actually gap up. So this is Friday with that really large down closing candle. This is Monday. We gapped up significantly, but we have had a red day. So I'm really hoping it gets down to my entry, which is at 69.09. And that's based off of this daily low and below that Friday low. If it does just push up from here, then I suppose not. But you can see I'm giving it plenty of room, really wide stop. But I just recognize the facts that we are nearing this institutional level. We have a really obvious swing high with nowhere for trailed stops at all. We took out a really significant sell side down here multiple times, spent a lot of time at a deep discount accumulating a net long position as everyone sold, chasing the short, and then we pushed back up towards this high. We haven't taken out any swing high on the daily time frame from this drop down. We've been just consolidating below this high, having these enticing drops lower, enticing drop lower. And yeah, I'm expecting that we should get a nice push up. You can see I've marked out the 200s, the 220s, and really I'd like to target the 280s. But each of these levels, the 250s, the 220s, will be good places to potentially take a partial. Expecting that this we accumulated down here, there's no need for us to come back down. We also, you can see this nice raid of these smooth lows below the 50s and rejecting off of that with a failure to retest this key institutional level. That's a signature indicating that we're likely done there. Failing to test the 60s here. I think this order block should hold, but I'm happy to buy it and give it room down to the 50s, because obviously if price started coming down like this and looking really bad, then I can mitigate if I need to. So giving it plenty of room, small size, basically swing trading it. But yeah, so it's a trade I want to put on and see what happens. I asked ChatGPT if it had good fundamentals, because I know nothing about stocks, and it said, yeah, it's sweet, it's all good. So it just said it's expensive, but it's sweet. And because the chart's telling me that it should go up, then it should be all good. So you can see a similar situation over here, really obvious high. It takes out the impulse low, has a nice move up, and then it just hits the high and starts just pushing up into it before really pushing above it. So looking for that nice short squeeze up through the highs. If we can hit my entry. If we don't take out the Friday low, I will likely just skip it. I could potentially buy it as a breakout, anticipating a nice squeeze higher of a tighter stop. So I might consider trying that. But if I did that, I'd want to be using a lower time frame entry, which is not really what I was planning on doing. But I like that it is kind of looking bearish at the moment. It's like it does have the potential to take out Friday's low. It did get a nice reaction from this swing low after leaving this long wick and heat to smooth highs. So like it could go up from here, but I kind of wanted it to come down here first, honestly. Would have to see. What would the alternative entry would be if it was to hit this high. If it hit this high and failed to reject lower, then that could be a long with a tight stop. So what I'd be looking for is if it were to, let's say, come up like that, hit the high, begin rejecting lower, but then come straight back up, then potentially you could get that. That is a possibility. I don't know if I'd take that, because I'm trading on a stock trading platform, like with like 2.5 times leverage and full shares. So it's not like it's highly leveraged at all, and that's kind of more of a swing trade. But if I was taking it on a tighter swing, on a tighter time frame, that could be a good entry actually. But yeah, ideally it comes down to 169. So we've got a nice impulse low down here as well that we failed to take out multiple times. If we do drop below that, we could get a nice reaction from that. Allowing it to take out this low if it wants to, because very low leverage, and so it's not actually a big deal. But definitely once it hits this low, you want to see a nice rejection. And this invalidates the trades because it's well below mean threshold of this balanced price range where we previously accumulated. This is a previous area of accumulation, so if this doesn't hold price, then price is not bullish. And that sell gives me a really nice risk reward. And yeah, I just think it looks pretty good. So that'll do for this video, and yeah, hopefully you saw from the setups that did work that I really liked, kind of what I'm looking at and what some patterns such as the delirium that are really cool patterns to look for. And also maybe you're able to see from a third person perspective what I'm doing wrong, what I'm doing right. And you might have some insights for me. Maybe you've got an insight into the stuff that I could be improving on that maybe I'm just not quite seeing myself, because it's always easier to see how someone else could be improving versus yourself. So I try and do that in my reviews. I try and see from a third person perspective of like what I had done, the trader had done. But if you have any insights, feel free to let me know, and I'll definitely consider everything.